when it comes to India's economy and as it continues to expand, according to you, what are the key challenges or risks that retail investors should be mindful of while navigating the investment landscape, and how can they effectively manage these risks to maximize their investment returns?
So you're right. I think it's not going to be a straightforward one-way journey, and we have seen that in the past. There are concern challenges which are there. I mean, currently, what we are really facing is the sharp increasing interest rates, okay, which has happened globally and in India also to some extent, which is likely to have an impact on the global growth, and we have probably see a kind of a mild recession globally somewhere in the end of this calendar year, and that could lead to some kind of volatility in the global markets as well as in our markets also. So that's another one of the risks which given to keep in mind. Also, we have general elections next year, and as you know, it's important for the India story to play out. You have political stability because the reforms, okay, which have been which have been implemented in the last whatever 8-9 years, it requires a stable regime to really continue with that and get the full benefit of that. So probably that's another event, okay, which would lead to some amount of risk depending on what the outcome is. Most of the other risks which were there, like from external front, I think we have mitigated to a large extent, right? Because on the external front, or if you look at India's current account deficit is in a much better situation. Our exports have gone up, especially services exports have gone up significantly. So the normally the CAD issue, which is to flourish, come up, that's to some extent mitigated, and oil also is likely to remain fairly subdued. But in that scenario, for investors to navigate in that volatility, the best way would be to really ensure that they participate in the market at various points in time, right? Because we never know when some correction is lurking around the corner and nobody is able to time that. And while the long term outlook is still good, so it will be important to one way to do is to do through systematic investment in the market at various points in time. Okay, that's I think the best thing which has evolved now, and a lot of investors are coming in through the SIP route now to manage the volatility. Other ways, there are a lot of products which are there in the market, especially in the mutual fund side, which try to reduce the market volatility and the risk. Like, for example, the balance fund or the balance advantage fund, where the asset allocation is very dynamic, and depending on the risk reward or the outlook for various asset class, the fund managers keep on changing the asset allocation. But even for a normal investor, it's important to really pay attention to the asset allocation, right? Because if you really try to go overreach in a particular asset class, then important to rebalance that out at various points in time, right? Because let's say if equities outperform, right, significantly, then your risk towards equity goes up, and if there's a correction, you could see a larger drawdowns over there. But if you keep on rebalancing that at regular intervals, which could be 6 months, 1 year, whatever you think is right, I think that will also be important to really navigate this volatility. And I think increasingly in the marketplace, there are asset allocation funds now which are coming up, which are becoming more popular, which not only diversify the risk, reduce the volatility, and you are able to benefit across the movement across asset classes, the cycles which are there in the various asset classes. So I think these are some of the ways which investors can really manage the risk and the volatility, okay, which could be there in the path going forward.
All right, Mahesh, I also want to bring in the policy making influence into this conversation, because in light of India's economic growth, I want to understand from you, what role does the government play in fostering a conducive environment for retail investors? And are there any specific policies or initiatives that have been instrumental in supporting retail investors and, of course, encouraging their participation in India's growth story?
So it's very important that retail investors also participate in their journey. It's not only institutional investors or foreign investors. And to that effect, I think the regulators have tried to ensure that, right, that retail investors, want to ensure that there are not major shocks in the market, right? Because they normally are risk averse, and any major shocks in the market tend to pull them out from the market, right? So I think a lot of regulations have come in place in the last few years, where we've seen that a lot of checks and balances have been put in the marketplace to ensure that there are no bubbles which have been created in the marketplace, and right intervention is there to ensure that there are not big surges in the market, okay, where and then there are big crashes in the market, which used to happen earlier. So balance, checks and balances in terms of what is the margin. Like a lot of little investors tend to, some of the investors tend to leverage, right, and then participate in the market, which leads to normally a lot of pain. So a lot of margin requirements, okay, have become much more stringent, and there's a continuous monitoring mechanism to ensure, okay, when you want to increase that, when there is position in the markets wide are much larger. So that clearly is something which we have seen done by the regulator, and also to ensure that the breadth increases, right? A lot of smaller investors, you're not dependent on only a few large investors, right? Even retail HNIs. So trying to increase the breadth of the market, so making it easy for retail investors to really come in, onboarding mechanism or ease of really opening up an account, and also being able to do in small ticket sizes. So I think that has also been increased. There are a lot of education, okay, which is being done, investor education, which is done particularly by the mutual funds, right? Trying to educate investors in terms of the benefits of long-term investing and the risk also associated, and how to really participate in that market. I think that is also ensuring that the investor behavior, okay, is much more structured, and they don't come in a herd mentality and then also move out. So I think you're right. I think regulators and also the other participants, I think role is important to ensure that more retail investors come in. They also get confidence in the markets, and they really stay there for the longer term. So I think that has really, I think we have evolved quite a bit in that spectrum, in that space. I would say in the last 5 years.
All right. Before we let you, could you expand on that, Mahesh, on the ease of access to markets, which a lot of technology and platforms have enabled? In your opinion, how has the rise of, say, these digital platforms and fintech innovations impacted retail investing in India, and what opportunities and challenges does this digital transformation present for retail investors?
So I think during the COVID period is where we saw, right, a lot of these digital platforms which were there gaining big traction. A lot of investors were onboarded, and if you look at in that period, right, in the last 2 years, we would have the number of demat accounts, okay, which would have opened has almost doubled, right, than what we did in the last many years. So clearly, I think in that period, a lot of the digital platforms have been able to reach out to a lot of investors. The ease of doing KYC, right, has also been a contributing factor in getting a lot of retail investors, small ticket investors. Investors can also invest in very small ticket sizes also, right? Need not really have to invest in large ticket. Even for mutual funds, I've also ensured that they come out with SIPs also, with small ticket SIPs, which has enabled. So that has really opened up. I think it's very easy for an investor now to really, within a matter of few hours, he can open up an account, do a KYC online, video KYC, and do the fulfillment. So I think that has clearly transformed, right, the whole retail journey. Only thing is that investors need to keep in mind that getting onto the digital platform, it's easy, right? You can easily start trading and opening an account, but you should also be aware about what kind of risks one are taking, right? Because it's always better to go through an advisor, even if digital platforms enable you to directly go to the market, right? Which sounds very exciting, and doing it yourself. But as we know, there are a lot of things which, there are various products which are there. Even if you directly invest in stock, there are various risks which are there associated with directly investing in the stock. So you need to go through a proper advisor who will be able to really navigate your journey, right? And ensure that you get the right products, okay, which you want to invest depending on a risk appetite. Because if you're just investing in purely based on returns, whether it's in a stock or in a mutual fund, just looking at past returns, that might not be the best way, right, to do that. Because as I said, right, investments in mutual funds and stocks there are risks. Okay, you can't look at past returns. So I think that's a pitfall, I think, which investors need to be aware. Okay, it's better to have any advisor. If you're investing in a mutual fund, go still have some advisor, okay, who will tell you about the products. Or even in stocks, okay, go through a proper retail broker advisor, okay, who will do your own research. Okay, I think that's important, okay, so that you have a good experience in your digital journey.
An investor education and awareness initiative of Aditya Birla Sun Life Mutual Fund. Mutual fund investments are subject to market risks. Read all scheme related documents carefully.